Hey guys, it's Sammy Warrior, the host of the Successful Millennials podcast. I appreciate you joining in and listening to another episode geared towards proactive and driven millennials born from 1990 to 1997. For those of you who are first-time listeners, welcome. This podcast is specifically geared towards those people born in 1990 to 1997 and are trying to find motivation as well as improve some tactics of how to achieve success in the 5 major categories. I invite you to listen into the journey as I do deep dives, as well as bring in some emerging experts to discuss these categories and our experiences and how to make progress with them. The reason I picked this specific age range is because I wanted to highlight the rise of social media and smartphones technology coming up in the formative years, rather than as an established adult. Myself being a millennial in that age range, I was in high school when social media really took off, as well as the iPhone, and that changed the way we grew up almost. Whereas generations who were born outside of that age range either was too young and was born into it, or they were already an adult and kind of fully developed. So what are these 5 categories? In no specific orders of importance, it's money, happiness, career/purpose, relationships, and that covers intimate, familial, and social, as well as health, and that's physical and mental health. Guys, I would love it if you can give me a review or DM me on Instagram at FinanceZilla or email me at financezilla@gmail.com. I would love to hear your feedback, as well as topics that you'd like to learn more on or things that I can do better. I am a big fan, as you probably have realized by listening to a few of these episodes, of continuous improvement. So anything that you guys would like to learn more on or things that I could do better on, please let me know. And if you could share it with just one friend who you think that one of these episodes can help them with, that would be greatly appreciated. Thank you guys so much. Now, let's get to the show. Hey guys, how are you?
Good. Hey, thanks for having us on.
Yeah, great to see you, Sammy.
Of course, I'm really excited for this conversation. I met Bobby in FinTwit a few weeks ago, and we were able to share a call recently. So it was really good to have you guys on this show, and hopefully we could trade some more knowledge. So I'm really excited for this. But for those who don't know you, Bobby and Dylan, why don't you introduce you guys?
Yeah, I guess I'll go first. My name is Bobby Gattuso. I'm a stock and more lately options trader. I host a Power Hour show with Wolf Financial, along with Dylan, who is Risk versus Reward on Twitter. And so we just, we trade the market as we see it. We go through different moving averages, breakouts, breakdowns, then we go through the options. For my background myself, I've been working in the beverage industry for almost 10 years. I've started a couple startups, one being Hop Theory, and my new products under the new label Tasty Orchard, which is a organic fruit and beverage infusion for the SodaStream market. So I've been actively selling that and actively trading the market every day and being a stock commentator for Wolf Financial, which is an online platform where you can you can buy and sell stocks. It's really good with analytics. It's almost like a Robinhood with this really wonderful social sentiment value add.
Nice.
Yeah, and bounce off that, my name's Dylan Brown. I'm from Chicago, Illinois originally. I went to school at the University of Illinois and studied accounting. Bobby kind of covered the stock side of things, but overall, I'm just an outgoing, talkative, 23-year-old. I guess in the show, I didn't mention this, Sammy, but not technically a millennial. I'm a 90s kid, but in the late 90s, we're technically Gen Zs. So I don't know if I break that part of the show, but I'm really just an outgoing personality. I like numbers. It brought me to the market. This year in particular, of course, was really exciting, and I wanted to take advantage of the opportunity. So I left my job in accounting to pursue that. It went really well so far. And what I'm excited to talk about on the show today is really there's just, a lot more also that I'm interested in than just the market. And I'm kind of figuring out, what works for me in terms of, time management, what else I'm trying to do. I'm entrepreneurial just like Bobby. And so, I had my own tutoring company in high school, and I'm looking into potentially doing other projects, that might be more on that side of things. So, I don't know. I'm figuring things out and I'm kind of letting it go as it will. And I'm really loving doing the show with Bobby. And I've enjoyed doing my Twitter account. And yeah, I'm just kind of letting life kind of take its way with me.
Yeah. And it's funny because you're right at that cutoff, but Bobby's in that cutoff. So I was like, all right, we'll make an exception for you guys.
In that area.
I thought about that when you said the show is literally based on millennials. But hey, my friends all consider ourselves millennials because we don't relate with the Gen Zs that like grew up with, an iPhone in elementary school. I didn't have a phone until I got to high school. I still fit that mold.
Yeah.
But
there you go. But it's interesting because we all have a little bit of a different journey. Now, obviously, we all trade and don't really work in corporate. But Bobby, you were more entrepreneurship from the beginning in the beverage industry for 10 years. Dylan, you had that spirit, but also went into corporate and accounting. And myself, I didn't really get the bug until earlier this year when I was like, oh, let's do the podcast. And like you said, the market was kind of doing well and I wanted to jump on the train and learn a lot about it. But I was in corporate for 6 years before I ended up leaving earlier this year. So it's interesting how all three of us kind of took a different journey, but find our way inside the market and figure out the possibility to unlock the time, I think is really what drove us all to entrepreneurship. Correct me if I'm wrong, though.
You're absolutely right. I've said this numerous times to people. I think it was 2020, like February. I was in Miami for a venture capital conference. And, this is a month prior to the pandemic, raising money for TC Worship and whatnot. And obviously, that put everything on hiatus. So what am I going to do now? And, what did I like before and what I was good at was trading stocks. And I took that, times 10, I always tell Dylan that I only know one speed and it's 100%. And so I've been doing that, full time every day since about that time.
Yeah, I mean, what I would say to that is I think you're spot on. I think the interesting thing is you made a comment, Sammy, about, unlock that time, that freedom of time. And, I think that a lot of people who are in our position can relate that you think that's the case. And I think that's still the goal. But really, when you jump off and you try to do something on your own, you find yourself sometimes spending twice as much time because all of a sudden, it's, you wake up in the morning and you're working for yourself. So you can be constantly working from morning till, you go to bed. And it's, a big part, I think, of what you're looking to uncover even in this show is how do you find that balance? Because my goal was to unlock time. And I took a step away from Twitter the last, several weeks for a portion of the reason being I ended up having no free time. I chose this path that was supposed to be, give me some freedom. And instead I was, working from when I woke up to when I went to bed. And so, I think it's interesting, but yes, that is the goal. And that's why I'm here. And I'm still figuring out that.
Yeah, it's always the end goal of freedom of time. But when you work for yourself, you're everything, your sales, your HR, your marketing, and your, the SME. So it's a lot of interesting things that go in, but it is working for yourself. And that's what's, I think, a first step. It makes it a lot better and a lot easier. Convince yourself to work 19 hours a day with the hope that eventually you work only a few. So, Bob, you mentioned that you got into trading in February, and you're a 100% guy, and that you wanted to jump into it all the way. And Dylan, in your accounting background, your numbers made sense to you. I was in analytics, so that's kind of my foot in the door of just reading charts and stuff makes sense to me. What was the reason you got into trading when 95% of the time it's better to just dollar cost average and stay in the market for 40 years and you'll beat the market that way?
For me, it was basically, I followed the market for a long time, all growing up, I was always interested, but I was always it was always pushed on me by my parents, long-term, just like you said, pick your winners, but always just hold on to them, your apples and whatnot. And then really when I started trading options before the pandemic, probably like 2019, a little bit, and I had been struggling. And the biggest struggle I was having was being, 1 week early, right? Or the same things everyone has. You're in the position, you get a little nervous, you get shaky, you sell for a small loss, and then all of a sudden you see exactly what you've been waiting for take off. And basically when we got to about November, not when the pandemic first hit, a lot of people were crushing it, March, April, May. And I was just investing like I normally do. I honestly was pretty nervous because, we just had this huge, market crashes, comes back up so fast. And I'm thinking, are we going to have, people were debating shapes, like is it going to be a W or a V, right? And I didn't know it was going to happen. And we got to about almost the election. And basically I said that this was a big turning point. There were a lot of industries that were waiting on who would be elected. And I felt that I had my job starting in January and I really didn't think it was for me. And I had known all of this, talk about, the risks, but I also understood that at my age, and my Twitter handle, describes it, risk versus reward. Of course there's risks, but losing everything when you're entering a job at 23 and, I was lucky to have that security blanket of my accounting job. I realized that these are other people's fears. This is, they're an adult with a family and they're, worried about what happens if, to take a couple $1,000s and to know how to deploy it in a way that could potentially create, outsized returns and also potentially change your life. When that couple $1,000 in this point in my life wasn't going to affect me because, I said it was worth it. And, I made some big risks that basically betting on Biden to be elected on all the Biden sectors, and it took off from there. I would basically go for anything that I felt was an opportunity where the potential reward outweighed the percent chance. So, Biden or Trump, if we want to say it was close to 50-50 at least, you could bet options really short term on marijuana, energy, all these different sectors that were more Democratic. And they paid way more than 2-1. And coming from someone that had bet on sports before, the whole idea is that it's not that you're going to beat the market, it's that your odds are probably better than winning, a sports bet. And I took a couple chances in a time where I knew it was favorable. And it's a big part of why I don't know how long it lasts. A lot of people have tried to kind of bring me down like it's because of the times. Mm-hmm. No shit. Oh, I don't know if we can swear on here,
it's fine.
No shit, it's because of the times. I don't think boy genius that's going to be the best trader for forever. I don't know what the future holds, but I know that the opportunity in this period is worth the risk for someone my age. And that's really what made me get more aggressive and leave a long-term perspective, which usually is where I am.
Yeah, I love that response. And that's definitely kind of what I was doing as well. Cause I was like, right now, not married, don't have kids, have a good nest egg because of the financial stuff that you have to work on early. And I could take this risk and let's just jump into it. And that's kind of what got you motivated or what got me motivated, especially with, February, March and April going crazy last year at a time where I had just left the job and I had IRA cash ready from a previous 401k rollover. So that's kind of what jump-started my intriguing. But Bobby, what about you?
Well, when Dylan was talking about, with the market volatility of the uncertainty and, sometimes, we're batting 1,000 because, those bets did pay off. And then when some people say, that's just luck. It's just the market conditions change every day and there's new opportunities there. We don't know what it is, but if you look hard enough, you can find the different sectors that are moving, that are trending. And you put the due diligence behind those. I don't think it's betting. I don't think it's luck. I think it's hard work and they pay off. So that's how I feel to Dylan's note. But for me, just keep, learning as much as I can every day. I told Dylan this, I think actually I told you as well. I'm trying to learn like 1% more than I did the previous day. And every 100 days, I have that 100% new gain of knowledge and never be too greedy or too stressed out about a position. Just try to keep stacking wins that I've written down on a sticky note that I look at every day now. And it actually helps me a lot. So that's how I go about it.
That's good. And 1% better every day is something that I obviously love and I preach as well to everybody who's listened to the show. They know that by now. And I think it takes something that what brings everybody together is the discipline needed to be a trader and to not let your emotions get in the way and to stack your winners or to cut your losers or to figure out what you need to do and stick to the plan that you developed entering a trade. So talk to us a little bit about how do you build the discipline it needs to be a successful trader?
Well, actually, Dylan and I were kind of deciding that today because, we were buying and selling the same contracts. And I was like, oh, I just sold Teladoc. I think everyone feels a little bit differently when to move off a position. When is that a certain percentage? Is that, you have a ticking time clock in your head that, these contracts decay and, the highest prices are in the beginning of the day. And you don't want to be holding something that is, a depreciating asset. For me, it's, picking the right trades. Well, actually, when I first started working with Dylan, I could pick the right stocks, but I was picking the wrong contracts. And now it's really about looking for the right contract and the right price point. and not rushing in, because I struggle with that every day. I was telling Dylan, I going back and forth this morning, I was like, I'm sitting on my hands and I'm watching all these monitors go up, and it's tough. It's tough. I think we made the right call in a lot of trades today. And now we just got into Penn, and those contracts were really expensive early on, and now they're in a price point that we like. So it's just being consistent in the way we go about those trades, and more importantly, take home profits. Don't be overzealous about anything, just because, once you're up so much, at that point, those trades can only hurt you.
Well, and I think it's the $1 million question is figuring out the kind of trader you are. So, to what you just asked, it's like if somebody's trying to get 20% on every trade, if that's their goal, they're going in the trade. If they get up 20%, they're taking it. And it's not about the name or support or resistance. It's just, I'm trying to get trades that I think can make 20%. If I'm down 5%, I cut it. I'm up 20%, I take it. Some people will do that. But you take someone who does that and you put them in the same room as some of the stuff I used to be doing, which is now I'm adapting. But I used to be doing really going for shots where I thought I could make 10 times my money and being willing to almost lose everything, but hit those more than, let's say I hit them at least 2 out of 10, just for example. You take someone who's trying to get those 20% gains and you put them in one of those types of trades, and it's chaos because they're not going to take the 10x gain. They're not going to hold for all of that. And they're not going to know what to do when it's tanking and they probably cut it too early and then it spikes, right? So everyone's going to be different. And that was a big reason I've kind of taken a step back from Twitter, is you don't have the ability to speak out loud like we are right now. And I became worrisome that, people may see something and they're not the same type of trader as me. And so, figuring out how to share that with someone else, what I really can say is figure out what's best for you. So, when you're taking those kinds of trades, know the trade, know that I'm willing to lose everything on this one, or I want to hit this price point because that would be a 5-10 times. Or this is a trade where I'm going to take a stop loss that falls right below here. You have to know. And right now I'm still in the process of figuring that out of, do I only want to go for certain types? Do I want to decide before I enter my plan? But it's really having that plan. I can't give you a, direct answer to discipline because I'm figuring it out. I've made lots of mistakes. I definitely held much stronger discipline all of last year, November, December, January, holding discipline. We got into February and everything was just going absolutely bonkers. Mm-hmm. And I lost a little discipline because all of a sudden you're seeing 5x, 10x, 20, and you get caught up in it. You can be good, 364 days, but one day you kind of lose sight of the main goal and you can make big mistakes on one day. So, I'm not going to talk about it like I have all the answers, but I can tell you that having a plan going in, knowing what that trade is for you, is it a certain point, knowing where you're in or out, make that decision beforehand. Because that's the biggest problems I've found is trying to talk to people and, they have a different plan than you, potentially in the same trade.
Yeah, and it depends on what type of things you're using. Like we were talking earlier about Teledoc, and some people may want to enter in and exit same day. Some people want to trade weekly options. Some people want to do just shares. Some people want to do longer term leaps, and there's a host of different ways in between that you can do. So understanding who you are as a trader is extremely important to your risk tolerance. We talked about that in a previous episode, 13, for those of you guys who want to learn a little bit more. But talk just a little bit about weekly options, something that for most people, I would imagine, is the most risky investment that you can do, at least from my perspective as well. It's something that I don't really dabble into, but I do use options. And I want to think of what are the similarities between something that is you're fighting that depreciating asset that Bobby was saying in theta decay that is extreme at that point, and how to enter in the massive changes that can happen in those types of contracts.
Yeah, I mean, let's take, I'll give you two examples. I'll give you the extreme example and something really current. So the extreme, last week we saw Amazon, everyone's talking about it. Everyone was talking about it last Friday, where it made a 3% move on Friday. It crossed the 200-day, broke out of a downtrend, made a 3% move on Friday. And Amazon, which usually you're going to pay, multiple thousands of dollars in premium just to be able to buy a contract because it's a $3,000 stock. It can move 100 points in a day. If you buy it, a $4,000 call for January, that's still going to cost you a lot of money right now. And so for you to make, multiples on that, you're going to need to see Amazon get to, 4,200 by, by January. But on Friday, when you're going into that final day of the week and you have options expiring that day, it doesn't have to be, 0 DTE that we're talking, which is final day of expiration, but this is just an extreme from last Friday. If you're going to enter that, which a lot of people would because of the 200 day, because of the downtrend breakout, but they'd probably enter with a farther out call, you can make a couple times your money maybe. But for that week, it made over 200. I think if you got the perfect contract, which I don't want to get into that, but I think the 3,400 call was 12 cents at the low. So $12 per call. And it hit a high of $10 because it hit 34.10. So, you're talking $12 to $1,000. I mean, that's
nuts.
That's nuts. That's nuts. Every 12, right? So if you put in $1,200, right? Think about it. So the idea there is that I like to tell people it's not that it's going to happen. Nobody knows what's going to happen the next day. But if Bobby is someone who used to trade stocks just based off comments, and he's going to enter at this spot because it's crossing the 200 day, and that's a key level, and it's breaking out of a key resistance, and the market's starting to heat up. I like to say, if you're going to take that chance with a further out call, why not nibble at least on a little that are extremely short term? Because if you get that 2 to 3% move, which happens only a couple times a year on a name like Amazon, where you get it on a Friday, the other day was July 2nd or 3rd, right into the 4th of July weekend. It did the same thing. And that was a 300 times return on Amazon. You can get these crazy returns. And a lot of people will post on Twitter, a percentage gain. And some people will say it's fake. Some people will say, this is not good for the community because it makes people believe in things that aren't possible. No, they're possible, but you have to take a few of these shots and, you don't know. Hindsight makes them seem obvious, but you don't know before. So we're going to give a current example. We're on Wednesday, so we have 2 days, and Penn is currently on an inside day at the bottom of yesterday's trading area. The 83 calls today had 24,000 in volume already, and only were 1,000 open interest going into today. So a ton of volume is pouring into these $83 calls. Now, Penn may fall off this inside day back to the 50-day moving average tomorrow. Anything's possible. But if this inside day leads it to break back above yesterday's high and get to the 84, 85 area, which would be like the next key resistance in this case, you're going to see a 10x on the 83 calls. Now, I don't know it's going to happen, but I think it's in the realm of possibilities, and I think it's better than 1 out of 10 in this case. You have an inside day. We're at the low range of today. If we could see it pick up into the end of the day, right, it's just an example. You could see that type of return, and it's really hard to get a 10x return on, let's say, a call that's 2 months out.
Yeah, no, that's completely fair. And I think it's also important to, Bobby alluded to earlier, to find what the right contract is. Yeah. And I'd like to get both of you guys' opinion on how to narrow that down.
Well, I'll take this one, Dylan, first, just because,
go for it.
With my background, I've always been the one trading common shares. And, Dylan and I take the same trade. I'm just on the other side doing the common trade part. And he's buying the contracts, and so we're looking at the same stocks. But early on, and I still have trouble with this sometimes. It's picking the right contract. And you asked me which one. It's tough. But for me, in my early experience with this, with a few months, we like the out of the money contracts that are a couple bucks out of the money. That if it breaks this level, it can absolutely reach that dollar amount. And, I guess I'm cheap. I love cheap contracts. I love that 10, 12 cent or the 30 cents contracts just because I can buy a lot of them and it doesn't cost that much. And those are the ones that really do fly if, your thesis is correct. But, early on, I was picking the wrong contract. And then what is the wrong contract? Well, it's probably out at the money or way deep inside the money where you're paying a fortune for this. It's not moving much, or, the open interest, there's not a whole lot there. The volume's illiquid. And so, the delta is not going to move. So those are the struggles early on for me.
Now a quick word for today's show sponsor. I'm normally not a fan of nice clothes. I like comfort over style, especially because I like being active often. Habits 365 is a brand that does both. The reason I'm excited to partner with them is because their vision is in line with this podcast. Their whole message is to preach consistent improvement by creating and maintaining continuous habits 365 days a year. That sounds exactly like what I like to preach, 1% better every day. It also helps that they promote positivity around important topics like mental health and wellness, which is one of the 5 categories, as well as social justice and much more. The fact that they employ mostly millennials and are run by 2 people who are in their 20s, like myself, is an added bonus. If you're interested in supporting the show as well as getting some apparel, feel free to enjoy the code FINANCEZILLA for 15% off online purchases by using the link in the show notes. That's FINANCEZILLA for 15% off online purchases. Guys, water is super important for maintaining physical health, one of the 5 categories of the Successful Millennials podcast. Doctors always recommend at least 8 cups a day, and for every cup of coffee or tea, you should probably add another cup of water. Throw in things like pre-workout, creatine, and the fact that everybody just has different hydration needs based on, their body weight and gender, physical activity, etc. You should probably drink well over that 8 cups of water. Me personally, I drink like a gallon and a half a day. I just love water. I drink it with every meal. I drink it when I work out. I don't drink juices or anything else. That's why I'm excited to partner with the Coldest Water. They make water bottles that can preserve cold water and ice that won't even melt for 36 plus hours. Especially in the summertime heat like now, these bottles that come in different sizes are a great way to keep your water cold when running errands, hiking, or just so that you don't have to keep going to the fridge every now and then. Enjoy a personal code for 10% off our online purchases by going to the link in the bio and using the code FINANCEZILLA. That's FINANCEZILLA for 10% off online purchases. Now back to the show.
The last part he said is the biggest to avoid, right? When you see a big bid to ask spread where the bid is what someone's trying to pay and the ask is what someone's looking to sell it for. If you could jump on a contract, usually let's say of Apple, you're going to see that be 1 cent, $2 and a cent, which is, 200, 201. That's what you're going to see for these really big liquid names. When you look at some of the less liquid ones, even Teladoc, which we did play, Teladoc can have a bigger spread at times. That's something to avoid because you can get stuck even if you're in the right play. But the big other thing that Bobby mentioned, and this comes from something I really try to do, is my contracts are usually playing if we break this level. So I always laugh because I get called a day trader, and Bobby laughs when I say I'm not. But the reason I try to say I'm not is I'm very rarely buying and selling in the same day. It happens, of course. But more often than not, what I'm trying to do is find a stock maybe a couple days early. Okay, if these next 2 days, there's this progression, then everybody's going to want this contract because this is a level that if it breaks here, we have this big gap of volume, it's going to run. And I don't want to get stuck where I'm chasing or I'm behind. It comes from the mistakes I made that I referred to, which is always being a little early. Now I really try to pick what could happen. I try to take a small position, and as it's kind of progressively working into the way I want, I'm adding into that. And so, I try to pick a point before it breaks. Teladoc this week was a great example. We got in, it had never closed above the 50-day in months. We got in before when it was still below the 50-day. And we said, okay, if this crosses tomorrow, everyone's going to jump in. Well, when we entered, I think there was like 300 in volume on the calls and 300 in open interest. And then the next day, there was 3,000 in volume on the calls. And we were lucky enough to already be in the contract. So we were able to make 100% that day. And then again today, make another 100% with the crowd. And so, that's usually what I'm going for. And I think that adds the difficulty of, a lot of the community that's day trading. If you kind of are listening to what I'm doing, you're going to be thrown off because it's not, a lot of traders are scared right now. They see the SPY. I've seen some bear flag comments, like literally in this moment. And, to me, I'm not worrying at all. If it falls, if the market takes a little dip or tomorrow we have a down day, doesn't bother me because I'm going to have a lot of things I'm waiting to add into. So, yeah. It's just different.
Yeah, and agreed. And you talked a little bit about support and different levels that are of interest that you want to look at, whether it be the 200 MA or not. But talk to us a little bit about the technical indicators or the strategies that are used in option trading that may differ from regular TA in stocks.
Yeah, I mean, Bobby, you follow the differences because you've done more regular.
Yeah, I love indicators. Dylan and I were talking about that last night. I love to go through them, all of them, just because if I'm not, I don't feel like I'm trying hard enough, because there could be something out there that is useful, and a lot of them are useful. The unfortunate part with a lot of indicators, they're all lagging. So essentially, if you have a bunch of indicators on your screen, essentially they're all telling you the same thing and they're responding the same way. So it's a combination of, like, I'm a big fan of volume profile shelves. You can see that on TrendSpider. You can see that on Thinkorswim or any reputable software. So I really pay attention to the volume shelves, just because that's where the price action's been. That's where the biggest turbulence you're going to see with the stock. But if particular ones, if you're asking me, I'm a big fan of the staples, as in RSI, MACD. I do like this one I've been using is called Vortex. It's a Vortex indicator. It's an oscillator. For me, visually is important. And this one, to me, there's less confusion there. And I think it's a little bit quicker than most.
Let me ask you something, Bobby.
Yeah.
You were trading just common shares before, and he was asking about, some of the differences. How often when you were trading just commons, do you enter a position because you see the volume shelf, you see it's on the 200-day, all these different factors are coming together. Maybe the 50 just crossed the 200-day and both are your support, and you're like, wow, this is a great entry. And you enter on commons and the next day it jumps. You nailed it. Yeah. But you're not, you're swinging it because this has been riding support. And so you entered and you're looking for this to be, a couple month hold, and you make 15% over a run.
Oh, I take, when that jumps.
But how often do you enter and you're like, wow, I nailed that entry. It goes 3% the next day.
I think we do that all the time lately.
So no, that's my point. When I'm sitting, that no, exactly my point. That wasn't a trick question. So what I'm getting at is, all the time, a common stock trader, you're not looking for just a 2% day if you're like swinging a stock. So you get this great entry, you get that initial 2, 3, maybe it's a 5% day that first day after you enter. And now you're like, you're happy. You're thinking this stock's about, I caught the bottom or whatever. And I'm about to have, a few weeks of this going up. Well, if you're trading options and you entered that exact same day and you caught that 3, 4, 5% day, the big difference is that's it. That was the trade. You just made maybe 5 times your money on that day. The other person made, 3 to 5%, and they're still going to be in the name for maybe months, maybe even a year, right? Maybe it's a long-term ad and they're just adding, dollar cost averaging. But the options trader entered the exact same time. So that's not always different. They're entering the same time, but they're out that first day or first week. And I think what gets hard for options traders is that the commons trader gets the 3% move. They're not even thinking selling always. It's like it was 3%. They're gonna. This could be.
Sometimes if I've had a rough few trades, 3% looks kind of nice.
If you're day trading common stock, of course. But if you're swinging a stock and it's getting bullish and it's starting to move, right? You're not in it for 3%. And what I think is interesting is that a lot of times your options traders will see a gain coming quick and it's like, oh my God, I got to take it. When that same person on the common side is like, this is just the start of the move because, but from the option side, the premiums explode on that day. All of a sudden it gets way more expensive to buy them. I mean, that Amazon day I'm referring to where it broke out and crossed the 200-day was a great ad for long-term. But if you're in options, it boosted the premiums for next week, next month, even all the way into January. They all went nuts that day because it crossed such a key level. Well, I wouldn't be holding any Amazon calls the couple days after because even a move up, you're not going to get that much action because it all got priced in on that, big breakout.
And Dylan, to that point, from my experience, with common shares and working with you with options, I have zero desire to ever buy and sell a common share ever again. I've seen the light, I guess, and options is the way to go.
Still not, but
until proven otherwise.
Yeah, it's definitely the potential for figuring out, like you said, when to exit, I think is a big and not to hold it a little bit too long. Cause the worst thing you can do is you're up 30%, let's say, at the first day of the option. And then you're like, oh, let me ride it till 50 or 70 or double my money. And then you go out and 20 minutes later or next day, it's now down 50 and you're stuck in that trade. So how do you kind of use the timing of an options, which could not really change in terms of the underlying share price? It could be the same, but things can, happen that will change either volatility or a theta or whatever will drop an option premium. So how do you kind of time the exit of an option?
I guess I'll take this one first. We did a lot of trading today. There was 2 option contracts that I took, and I was in and out within 20, 25 minutes. One reason for the contract is I was up really nicely. No reason to stop a good thing. But the most important part, I wasn't very familiar with the asset I was trading. It was SOS. It was moving up just because Bitcoin. It's an ADR, so it's a Chinese Bitcoin mining company that Dylan was mentioning this morning. I wasn't as comfortable with it. There's a trade that I took with Palantir today, and it's down. And I'm still holding it just because I know Palantir a little bit more. So there's a little bit of psychology. There's a little bit of a history of me watching these stocks and how they respond, and those behaviors play a big part into how long I hold these things. Like Boeing, today I was holding when Dylan was selling, and it bounced hard. And it's Boeing is something that can move $7, $8, $9 without really trying that hard, even if it's having bad news for a week solid, like it has. Dylan, what about you?
Yeah, I think the one thing I really like to do that's helped me a ton is figure out, okay, where's my goal of this hitting by the end of the week? So you take a stock and let's say there's a key level, maybe it's been falling and there's a clear wick from before it started falling that you're targeting, or a 50-day moving average or something, right? And I calculate, very simply, let's say I'm buying the 110 call and I think I want it to get to 112. So that's $2, right? I want to get $2 for that contract. Well, then at the very beginning of the week, it's not at 112 yet, but the contracts are already $2. So it's already basically, the value of the contract is pricing in the target that I want it to get to. That's like the number one thing I started doing that helped me significantly is I would get caught in a trade where, Monday, the options contracts would already be hit that number or even higher. But I felt like the stock still had way to go up, and maybe it would, but it wouldn't go up fast enough where by the end of the week, I just waited through all of this and it ended up becoming so much more painful because it has one down day in the middle of the week. Now the options fall 50%. You don't know what to do. And then by the end of the week, it closes right where you hoped, but it's still only, that $2 that you originally wanted. So that's been the first thing that's been so huge for me is before I go in deciding, okay, this is my theoretical price target. And the options will be worth, this much intrinsic value if it gets there, on day of expiration. So if before the day of expiration, the premium is worth the intrinsic value, if it gets to that target, then I sell. And that's been a really great starter for me. Besides that, I would say I look for what's made me do a lot better lately is if I think there's going to be a breakout from some sort of technical, formation, a bull flag, inverse head and shoulders, or whatever it might be. When it tests that breakout, I'll sell some, then hope it breaks out. I'll sell the rest, and I'll try to add on the retest. That's a really common thing that a lot of traders talk about. It saves you a lot of pain. And, sometimes, sure, it breaks straight out. You miss an absolute, dominant winner, and that hurts. But other times, like today, Teladoc started to do an inverse head and shoulder on the 5-minute. We already knew we wanted it on the daily. We were able to sell some when it started at the top, get in at the bottom when it puts in the inverse head. When it ticked, it closed the gap on the day and went right back up. Sell some at the second shoulder. Buy some again. There's some perfect time. Buy some right before me. I say I'm not a day trader, then you hear this, and it's like, But there are times where it's like so perfect. Then it breaks out. You got to take a break. I wish we could show the chart because that's just a picture perfect today, what Teladoc gave. And you have all those spots. So, you sell on the breakout and try to buy on the retest. It's said all the time. It's really difficult sometimes mentally because, you try to do it and then it breaks down right after you try or whatnot. But you have to know that over time, you're going to get them. Over time, there is a method to the madness. There is a method to the madness. And yeah, I would say those are the two things. I look for a preset number that I'm shooting for. And if my premium gets there, I take it no matter what. And the other one would just be to sell on the gap ups. I always sell a gap up and I just pray that it's going to have one of those spikes where it goes right down, fills the gap down and pops back up. Those are lovely. But if it gaps up, there's no reason to, mess with it. You'll see a lot of traders that are really good at momentum trading, and they'll tell you that, if you get those gaps, you'll always have that second opportunity. Even if it's a gap and go, it's not just gonna, nothing goes up every single day forever. Yeah. Nothing goes up every single minute. So
no, it's definitely good points. And I definitely think that you mentioned the discipline and holding the emotions to be a successful trader helps in other areas of our life. We touched on it a little bit earlier, but I wanted to kind of close this interview talking about the other 4 categories and how being a professional trader, again, this question goes to both of you, of course, how that has affected the other 4 categories of health, your purpose or your career, your relationships, and then your overall happiness.
I was just thinking, like, every time I go through Sam's Club and I'm looking at different products, I just refer to the ticker name. It does affect you when I'm trying to buy an airline ticket. Oh, should I do AAL or should I do DAL? Should I do LUV? In that regard, just because it's always on your mind. When you talk about family relationships, I think, this is, can be a highly stressful job. There's tremendous highs and tremendous lows. Like yesterday you said, you're on your own island. And it's true because you are responsible for every trade you do. That was all you. And you can't just look at what some guy said on Twitter. So you're very accountable. And I think it's made me more accountable. It's made me do more due diligence in everything in life. And overall, just, I think it's a tremendous opportunity for anybody who's interested in the markets to, learn from, all of us. You can learn anything on YouTube. The opportunity is there.
Yeah, I mean, for me, I would say it's been a journey. It's been a real journey. I was very fortunate to have, pretty outlandish returns at the beginning, but unfortunately, those pillars you're discussing, they got hit by it. Even though I had a lot of money coming in, I wasn't spending any money on things that I wanted or would enjoy because in that time it was a feeling of like, I want to be able to use this money to allocate it to be able to make more because, it was a lot of excitement going on. And I was also diving in, like we mentioned, so many hours a day where I wasn't looking out for, eating right or working out enough or calling my friends, like you mentioned, friends and family and talking to them as often. I let some of those other parts subside because I got so caught up in it. So, I think that those are definitely things to, not shy away from, but to share because a lot of people go through it in the same positions. So, I'd say it made money confusing to an extent, how much I should be spending and how much I should be, saving. And, there were a lot of question marks that come up because, you might make a trade where you make $10,000 in a day. And then it's like, can you go to a fancy dinner that night? Or do you know that you might lose $10,000 the next day?
Yep.
And I think that there's just a lot of emotions there that are really complex and they're really, I'm still working through figuring out how I want to do it. I had a conversation with my sister actually yesterday when we said, maybe if I do this, really full-time professionally, forward in my life, maybe you take a vacation every 2 months. Yeah, it's not traditional, but this job isn't traditional. Right. And if you're going to be able to be zoned in and focused and all there all the time, you might need a break more often. You may need a week because, if you're trying to be in the market 52 weeks of the year, it is really difficult. That is really a hard task to take on. I mean, my dad's good friend, I traded with him for a while. He used to work at Citadel. We would just talk on the phone every day. He only trades winter. He golfs in the summer. I mean, he's older. I mean, it is, it's a little bit different, but he only likes to trade in the winter because It's just the time of the year. He likes his summer for golf and for family and for a lot of other reasons. And when he's home and it's cold and he lives in Chicago, that's when he's trading. And I think that there's a lot of beauty to that. And so, these pillars, like I'm working on focusing on the other pillars, because when your mental health is there, when you're talking to friends, when you're doing all the other things, trading becomes easy. It just becomes the secondary part of your life going on, and you're not putting as much money on it in the line because you have something coming up that you're looking forward to doing, and you don't want to be thinking about your trades. But when all you're doing is trading, then it becomes a lot harder.
But Dylan, if you're going on vacation and then Amazon's retesting the 200-day SMA, what are you going to do?
That's the point. I got to start missing. Like, you got to start missing trades to hit trades. Like I 100% know. And I went through this for a while, and it was really hard on me to, I wondered if I could sit here for a little bit. Like, the market's going on right now. I'm sitting here doing this. And those are the things I'm working on, is because my life.
I'm still looking at it. I have all these watch lists.
But you're new to options. You're still in that first phase. Like, for me, it's been a couple years now, and like it got bigger and bigger and bigger part of my life till it hit an extreme, right? When I started, it was one contract at a time, just learning. It got to a point where I had, $50,000 on the line at all times. And I was up at night checking stocks, waking up 2 hours before open. Everyone who's really done it has been there, where they wake up right for pre-market and they're following after hours. I mean, and then after hours, they're
every day
tracking the stocks. I mean, I don't think longevity is there for me if I did that. I can't tell other traders it's not there for them, but for me, you prioritize the other aspects, and then you use your extra time, which is still a lot, to really dial in. And I think that ends up being successful. Also, just while we're here, to the point of, we brought in inside days earlier, the market did end up falling on those bear flags, and Penn it was 78.28 was the low yesterday. It ticked 78.33 and bounced. That does not mean anything in particular is going to happen tomorrow, but just to emphasize the inside day that we're talking about, it literally, did one of those, hit 5 cents higher than yesterday's low and bounced. So you just see what we're talking about there. But yeah, I mean, Sammy, it's tough. I mean, you're doing this because I think
Yeah, it's for me, it's all like, why is the point of I want to earn, this much money, right? For me, I love traveling. We talked a little bit before that I'm about to go on another trip. And by the time this episode is released, probably I'll have come back from this trip. So that's why I do it. Like, I could do it from wherever. That's the flexibility. The timing necessarily is more probably with the trading and with, the podcast and other things that I do with the coaching. But for me, it's where I want to do it. I want to be wherever I want. And that's so I can travel. And so that's why it gives you the motivation. It gives you the discipline to consistently work on it and not swing for the fences to hit a number that you don't have the meaning behind it. Like, everything needs to be intentional of why you do something. And that really helps, at least for me, give me the balance in trading and in all the categories of life. Really, it's just, why do I go to the gym every day? It's because I like it, and it gives me the confidence that I like.
I think the number one to come from what you're saying, and kind of all these different aspects of these, mental health and your families and communicating with other people and all this stuff. What I would say is that, don't ever think that you're the only one, and don't ever think that, some successful trader never went through it. You mentioned sometimes about being successful, and I'll hold off getting there yet. I'm young and it's starting, and we'll find out where where it lands for me. I don't feel like I've made it or not made it. I feel like my journey is just beginning. But, I've just seen people feel like, why me? Why is it happening to me? But it happens to all of us. I felt like I was so good about keeping my mental together for so long. And then I had, 1 week of weakness. And of course, it happened to me at the time it happens to most, after my best day. I had my best. I worked hard for months, and then I had my best day ever. And it got to my head, and it led to mistakes. What I do, I went too big in size after that. I chased. I wanted to get back to a number. I mean, all the things we talk about, just because we're sitting here and we're able to say, don't do it, it's because we've done it.
Yep.
Oh yeah. I've made every mistake possible.
Yeah.
Yep.
I mean, it's never, and that's what's crazy to me is you have all these people that want to take you down, that want to say, oh, this person doesn't do this or this, don't listen to this person. Online and Twitter can be very toxic. And I think people don't want to admit that we've all done it. Like, we've all made these mistakes. Nobody's out here saying, I am perfect. I make money every day. I mean, there's some people saying it, but I don't listen to them. I mean,
Yeah, you can't.
Yeah.
So it's tough, and to have a good support system and to really be able to rely on them when you need them, I think that's really big.
You have to have a candor, and for every trader, every good trader, we've all lost, and I consider that, and a lot of people consider that your stock market tuition costs, and the ones that can stay afloat long enough, finally figure this out. And that's why they're so successful.
Yeah.
Yeah, 100% agreed. And conversations like this with like-minded people help for sure, keep you guys in check and stuff. So that's why I love the conference, and I love having this discussion with you guys, and hopefully we continue to have it. And for those who also want to reach out and learn more about you guys and maybe follow the Power Hour show, where can they do that?
Yeah. So if you go on Twitch, that's Wolf Financial, or capitalized Wolf _financial. And Dylan and I will be doing a Power Hour show from 3 to 4 o'clock. We'll have a different guest on, usually around 3:15, and this is Eastern Standard Time. And you can also follow us both on Twitter. My handle is Bobby Gattuso, capitalized B and capitalized G. So it's BOBBYGATTUSO. And Dylan, do you want to say yours?
Yeah, I think mine's actually at Dylan Jacob 1998, DYLAN JACOB 1998. But you'll see Risk versus Reward as like the title name. I haven't been posting so much in the last 6 weeks or so, but I'll be back on it and getting active and looking forward to a great end of the year. I think there should be a lot of excitement.
Yeah, and I post charts regularly, and a lot of the charts that we're posting, we're actively talking about and trading, and we'll show you those opportunities and what breakouts and breakdowns that we're actually looking at.
Awesome. I'll definitely have all those links in the show notes, and I appreciate you guys' time. I know it's about the time for you guys to jump on your recording as well, so I don't want to keep you too long, but thanks, guys.
Thank you. Appreciate it.
That concludes another episode of the Successful Millennials podcast. I'd love to hear your thoughts on this episode and which tip or trick you picked up on that you'll implement after listening to today's episode. Please don't forget to leave a like or subscribe on whichever podcast streaming platform you're listening to right now. Obviously, we're on all of them. And let me know what topics you'd like to learn more on or ask a guest on. And my email is going to be in the show notes. It's financezilla@gmail.com. That's the best way to reach out to me. If you have Instagram and you prefer to reach out there, I'm also quite active and I'll respond to DMs. It is at financezilla. Again, both of those will be in the show notes. Now, if you're wondering on how I got to where I was able to retire from corporate and kind of do this as well as invest and trade in the stock market, and you would like to learn more, kind of take control of your finances and therefore take control of your life and being able to do what you want to do, being financially independent, reach out to me via either of those ways and ask for that 30-minute free strategy consultation session. The link again will be in the show notes for that, and we can talk about how to live the life you want to live and make money doing it, as well as be comfortable and happy. That's, I think, the goal of everything. That's the reason why I started this podcast and why I do this consulting business. So reach out, let me know if I can help, and apply via the link in the show notes. Until then, talk to you guys next week.